Here's an eMiniDayTrader view of the markets for Tuesday, May the 19th, 2009. Of course, this is just a shortened version of what we post on our members side of our website with fewer charts and less detail. But let's take a look at the overall view of the market, see if we can get a bit of a handle on that. We were mentioning yesterday that our initial upside objectives were 1150 and then at 15. And which turned out to be today's high. You can see in the overnight session it did exceed that, so we did have that follow through that we were looking for. But as the market rallied up, it just petered right out there and had a good sell-off and finished in a pretty weak fashion. So we really do expect the market to continue down here. 897 area is the next likely area of support in this. I think kind of a topping out sort of scenario, at least on a short-term basis. I'm not talking over weeks or anything, but these up days that we just had in the market, looking at these individual profiles here, of course, what is very evident is the value areas. I mean, it just really squished up there today in a consolidation manner. And when you have a market that's rallying up like this, on volume that's getting condensed, it's either going to pause and either retreat and then rally some more. And on this one, with that kind of a weak close, it would stand to reason that we're probably going to come back down and test more than likely into about the 890 area, 892 area is what we're looking. So some potential support in around here, and of course we've had that resistance really here. So if it can hold below today's low too, I mean that's a negative and likely to come on down and test in this area as well. As far as our trades were concerned today, we had several trades, and the first one that we had today actually got us into the market right off of the high, and got a short right here at 12, and that one really worked out nicely because it came down here and then stopped us out at break even, but nice trade on the right side of the market, moving almost a couple of points on that first entry. We then tried a little bit later on to get long, and we ended up by getting long twice, once in here off of this deceleration and once off of this deceleration. The first one, unfortunately, we just got nicked by one tick, so we're stopped out. But on this second trade, it had a nice run up there, so nicely profitable on that trade. A little bit later, we had another deceleration here, so another short trade, so we were able to participate in this down auction, so that was very nice. As it rallied up, we had another deceleration here. Unfortunately, we're a little bit too early on that. It made another high before selling off, so we ended up by getting stopped out on that trade. But as this market was selling off, we had another one of our trades which got us short once again at 12. And so we're able to participate in a good auction lower to finish the day. So a nicely profitable day, and a market that was obviously trying to go higher most of the day, really had a fairly tough time doing it. As you can see, when it goes up and makes those kinds of highs and then backs off like that, it's usually an indication that the attempt to go higher like that is it's just not finding the follow through, because obviously a market that's rallying doesn't just have to have buyers to get it there, but it has to have buyers once it's there as well. And that's of course where the market in essence sort of fell out of bed today. Just no follow through once it was making those secondary new highs compared to the early new high, the secondary new high here, and then the back off. So that's really what we're looking at in the immediate future in the E-mini S&P. So got any questions or comments? We'd love to hear from you. Just send us an email at info@eMiniDayTrader.com, or our website, of course, is eMiniDayTrader.com. Thanks, and bye for today.